Unit labour cost 2.2%. That is above the expected 1.9 from 1.6. Productivity 3.5. We were expecting 3.4 from 3.7. Claims 216,000, below the forecast range there, and the prior revised trivially higher to 229,000. Continuing 1.679 million, much below the expected 1.715 from 1.719. So just to summarise very quickly here, much lower than expected jobless claims data over there, although those unit labour costs have been revised higher,
a little bit lower,
and
expected
additionally we are seeing some downside here in Treasury. So again, we are keeping a close eye on euro. It has finally breached that 107 now.
That means
downside
the dollar
for stocks
is
as
moving
well.
up.
So that's signs of a
Breaking
solid
out above
labour market.
Resistance.
Although
Now
unit
it hasn't
labour costs
broken
are
out
still
with the daily
persistent in
closing basis just yet.
That appears to be explaining the
Just shut
market
up.
reaction. Meanwhile, Canadian building permits down 1.5% in July. That's less than expected. We had expected a decline.
We don't care about Canadian building permits. All right, because I don't have any CAD positions open. So there we go. Yeah, the DXY is breaking out. If we go over to the daily time frame, you're going to see that it has not been able to close the daily above this monthly resistance over here. Now, obviously over there it did, but over here we're still struggling with it. So yeah, we just made a new fresh daily high on that. So the the S&P 500 is moving lower. Now, something that I did want to say about the S&P 500 is once it got below this low right here, it will have made its expected daily range to the downside. What does that mean? Well, every single day these things have an expected move, and if the market is going to trade with the options market, then these expected moves will sometimes indeed hold. So you can see right here is today, right? It's today's low. So you just made yesterday's low. Apologies. This was today's low. This is yesterday's low. You just made a fresh low based on that news right there. So if you felt like seeing how you're on the edge of the expected move, if you wanted to take a long, you could. The jobless data that we got wasn't very good. So let's go ahead and just pop one in and see what happens. This is on the ES futures, but it is the macros. All right, I don't have enough buying power in this account. This is a live account, real funds. Not enough buying power to essentially take E-mini contracts. So we have to go with E-macro contracts. It looks like it wants to purge a little bit lower. We had a good day yesterday. I do not understand why this P&L is so bad today. Yesterday, when all the markets were closed, this account was well up over $500. So I'm not really sure what's going on there. I'm assuming it's just based on the Microsoft short that I have going on. It is a defined range trade, so a defined loss trade. So it shouldn't be up there according to where Microsoft is currently trading. So we'll go over here and look at Microsoft real fast, MSFT, and you'll see, yeah, it shouldn't be that bad. And pre-market, this thing is gapping back down to the original area where I took the trade. All right, this is where you're gapping down to pre-market. We lost tech. That's why I had the sectors up, but I was trying to get live before the news came out so that way we could look for a position. We will talk about Bitcoin. Here is your tech sector. There's yesterday's move. You are gapping way, way, way down today. 172. That's a $2.50 fall to the downside. In any X product, in any Spiders sector, a $2.40 move is a big move. So I should probably go ahead and close off that short or that long and wait until the S&P 500 actually finds support. The way to do that is just sell to close, review, send, and boom, right up there. So we lost maybe $10 on the trade. Not bad. Here are my current open positions. Like I said, it's got me losing $172 on that 330 put. $172 on a 330 put on Microsoft. And if we go back over to Microsoft, you'll see that we're setting at 330. So yeah, that's not going to be accurate when the market opens. I promise you that. Let's go over to Bitcoin hang on, let me make sure everybody can see me, hear my voice, and all that good stuff. So you should be able to see me. You should be able to hear my voice. It does look like we are lagging a little bit. Let me see what's going on over here. So we're down at 2925. So let me change this to 29. Oh, I got it at 2750. So we should be good, but it does look like I am lagging. All right, anyways, moving on. I'll just pause this. Usually that lets me know if I'm doing good or not. If you could see my screen, hear my words, just let me know in the chat. I'd be appreciated. And make sure the screen looks good and it's not blurry, because on my end it looks like it's not in HP or high def, which it should be. Definitely in high def right now. So Microsoft 330.28. All right, let's go over here to Bitcoin and check it out. So we had a red day yesterday on across the board. The Nasdaq, the tech sector, everything was good, or everything was down. Thank you, Fabio. And here we are on Bitcoin. Bitcoin made another bar yesterday or earlier this morning. What time was that? No, it was at 1 o'clock, 1 p.m. yesterday. Just a big fat down move and a big fat up move in a very tight range. I still hold a short in this range down here, and it didn't get stopped out. So that short was taken on this candle right here, I do believe. And I almost got stopped out there, but it's still just sitting in and holding, as Bitcoin does the same thing that it's been doing for a long time, which is absolutely nothing. I mean, I go back in time and look. I mean, all of this is just sideways from literally like 25,330 to 26. We had that really good news, or that really good ruling for the courts against the SEC, and then it was sold right back off lower than where we originally had that move to the upside, and now we're trading in that range. There's Bitcoin's price action. That's literally it. You have closed the daily below this weekly support level right there. Should be a line there. I don't know why there's not, but that is weekly support, 25,937 spot 02. We have not closed a weekly under that yet, but we have closed a daily under it. Actually, looking, we've closed multiple dailies under this. 1, 2, 3, 4, 5, 6 dailies have been closed under that weekly support level. Now, obviously, I hold a lot of Bitcoin. I don't want you to come on here if you're new and think that I am an uber Bitcoin bear. I am not. I want Bitcoin to go up because I hold a sizable position in on a cold storage wallet, right? And I keep a little bit of Bitcoin on exchange to trade. So yeah, someone asked if I could teach them how to do that. Well, it's going to take some time, but essentially all you got to do is say you hold one Bitcoin, which in this case would be 25 grand. I would take 5% of that and put it over on exchange. 5% of your holdings, put it on exchange. Use low leverage like 15, 20x, and you got to know how to trade, obviously. Because if you're taking trades and you don't know where to trade, what time to trade, or any of that, then you're just going to lose that money, and then you're going to have to deposit more Bitcoin. So wait until you know how to trade. Once you know how to trade, once you have a consistent record that you are profitable, then you can basically just sell short Bitcoin on the Coin M margin futures product, and that will allow you to, capture any of these downside moves. So that way you're not just sitting in Bitcoin watching your losses go down and down and down. Now, I have not been able to catch many of these big downside moves this time. When you have a lot of chop like this, and let me explain something. This is a lot of chop, right? When we broke out up here, I assumed that we were going higher. On this day right here, we broke down. That's when I started looking for shorts. Only where I was able to position myself was stopped out. So when you're trading in these ranges and Bitcoin just does this crazy ass price action like that, that's going to take you out of your trade. Then you have to wait for another setup, right? So we took the setup here and we did capitalize on this move to the downside, but it was with the tether. It wasn't with the Coin M futures. So literally I missed that big down move on my hedging account. So you don't always catch them, but you could have caught this, obviously waited for the day to close, and then watch the next day. How far above do you start trading above the close? If you don't go very far and then roll back over, you can take a chance on shorting that using yesterday's wick as your stop loss. It's really that simple. There's plenty of people that wait for the close before they ever put any orders in, because what happens pre-market or, at the beginning of the market isn't necessarily going to be what happens throughout the rest of the day. Bringing back up the S&P, you can see right there, we did get a nice little drop. So moving on, the positions that I'm currently in is still pound USD short. I mean, there is no reason to take this short trade off, especially now. We've already taken profits and we're just sitting in it, letting it ride. USD JPY is more than likely going to get stopped out, but I did take more profits off of that when it was down in here. And unfortunately, I should have done it, obviously, when it was down here, but I didn't. I already took profits on it multiple times. This was a full-size position that I took. I think I've cut it down 2 or 3 times. So it's the best trade that I've made all year for 2022. All right. And so far, I haven't made a trade to beat it in 2023, because when I took the entry, it was in fact October 2022. All right. So moving on. Pound dollar, we're in that. We're in USD Swissy longs. We took this on a live stream way over here. Let me turn these indicators off real quick. Way over here, like on one of these down days, one of these days right here, we took it. We didn't get stopped out, even on that wick low. What I assume I've done there is after that day closed up, I probably moved the stop up to it. All right. So that's what's going on there, but it's just slowly moving to the upside. It's not moving as fastly to the upside as, say, the DXY in itself. But if the DXY continues to have strength and we continue to have weakness on the Swiss franc side of things, this could be a trend change. Now, obviously, the trend is down, right? It's down. There's no doubt about it. But the near term trend has almost changed. Let's go to the weekly. Yeah, if we close this weekly above the 21, we can go ahead and say that there's a pretty decent chance that we might be in the midst of a trend change on this asset. 2 reasons why I like the dollar better than I like the USDCH, or better than the Swiss franc. First of all, the Swiss franc interest rates are only at 1.75%, whereas the USD is at 5.5%. See, there's a big gap there in interest rates. Typically, professional traders will buy into products like that just for the for the percentage indifferent, or for the percent difference in interest rates. It's called a carry trade. Good morning, baby. It's called a carry trade. So that's why USD JPY has been pretty much long, simply because JPY has 0 interest rates, right? They're setting at -10, to be honest with you. Negative 0, not -10, but negative 0.10. All right, so negative 0.1%, and they're just holding it there. So it doesn't always work, obviously, because in this scenario, your U.S. is rising interest rates all through 2023, but yet this thing has not been able to do anything. It's been Swissy all day long. All right, so let's get this on here. It's going to show our yearly opening range. You know what? I'm on the wrong chart. That is why. There we go. Now let's go back to the USD Swissy. All right, so it's not on this chart either. What the hell? TradingView messing with my stuff again? So we just want to find the yearly opening. It's easier if we just go straight to the year. Right there. All right, so there's your yearly opening range. As you can see, you made a nice little move to the upside, and then you've been making fresh yearly lows all year long. This is a downtrend, even though there is a difference between interest rates. So Forex is just weird, and sometimes the carry trade will work, sometimes it won't. But I always say, look for trends, look for positions with the trend. All right, so this is a downtrend. Why do we get long? Well, because as soon as we breach above the 50 on the RSI, which is right in here, that's where we start looking for day trade entries long. Because like I said, a trend could be changing. We don't know that. We can't see into the future. It's just an indicator, and it's a lagging one at that. But it does tell us that the momentum is no longer bearish once you break out above this. And we had this little bull trap situation right here, which is fantastic. Right here. You can barely see it. Let me pull it up. Not that. Right here. So on this day right there, you had a little bull trap, and then it acted like it was going to sell back off, but it didn't. And it maintained this support for a long time. It wasn't me that found this trade. It was actually somebody in the chat. In the chat, one of you few ledges out there was like, hey, can't we take this? I mean, it's broken out above this, broken out above that, and it's at daily support. And I looked at it within 5 seconds. I was like, yeah, let's take it, but I'll take it with a small position because it's been sideways. So, yeah, we've just been sitting in it. And we should be good to the carry. So we're not paying to be long. Shorts are paying us to be long. That's what's good about the carry. All right, you can generate alpha that way alone. And if price does indeed fact go in your direction, you are good to go. Remember, in the Forex market, you're talking about trillions, $7 trillion settled every day. So it is one of the biggest markets in the entire world. Let's go look at bonds, interest rates. This has not been working for some reason. It says it's moving. The ZB is moving, but I am 15 minutes data delayed on this, but it's moving down. All right, well, we did have a nice, this is the bond, 30-year bond future. The bond futures, sorry, but it is the 30-year. We did have a nice big bullish pop in that. And then basically we've been trending more to the downside here, and it's been trending down for multiple years. There's 2023, pretty much down. Go back to 2022, pretty much down. Yeah, been trending down. So 2023 is no different. Let's go check out CME Fed Watch. Let's reset it because that was the last time we looked. And there it is, 91.0% chance that the Fed is not going to raise interest rates this month. It is September, and we will have a Fed meeting where the FOMC on the September the 20th. All right, September 20th. Now you can play around with this and you can go out, but I don't suggest you do that. I see people doing it all the time, and they're like, look, they're going to raise rates or they're going to lower rates based on this. No, if you look at the outlook, raising rates seems to be the outcome, not pausing or lowering. Cutting rates is not happening this year. They've already said it. Like almost every single Fed meeting that we have had in 2023, they have said it. We are not going to be cutting rates in 2023. In fact, if you look at the dot plot that we put out, such and such, it shows that it'd be late 2024 to any rate cuts. And that's only if we start seeing data move in our direction. The data is not moving in their direction. All right. It's important for you guys to understand that the data is not moving in their direction. They're focusing on core PCE inflation. Core PCE omits fuel and food. All right. It omits gas and food because as long as oil is moving to the upside, we can confidently predict that the CPI or your headline number is going to continue to go up. All right. The headline number that everybody's been focused on went from 9 to 3. Fantastic. But then it popped up. What happened? Oil had a $10, $15, $20 move. And then we got a 2-point check on inflation. So if oil continues to move to the upside, we can confidently predict that the headline CPI number will be higher than 3.2% as long as oil is continuing to move higher. All right. So down here around monthly support, you're looking at lows of $67. Up here, $20 difference. Price is trading at $87.22 currently. Now, I did capitalize on this move to the upside. First, I tried a short right there. It did not work. Right here on this daily candle, I was looking at it. Well, if we get downside continuation, maybe it wants to go lower, but I didn't have my moving averages pulled up. So there are the moving averages. So you can see what it did essentially, right? It traded right down to the 50 and booyah. But anyways, once I lost on this trade right here because I opened it on this day and this day had a surge upward. So I closed down the short, waited for the bearish day, opened up a long and closed it somewhere on this day, right in there. In hindsight, obviously, I wished I would have kept it open, but with the buying power, I was only able to buy one contract of crude oil futures. Now, I know I can trade it in like USO and stuff like that, but the futures to me are fun. I don't know why, I just like them. I like them on Bitcoin, and so far I've been trading them. I like them here too. So yeah, instead of taking the USO, buying a couple calls, I went ahead and bought calls on the options on the macro, M-I-Crow. Micro. I keep saying macro, but it's micro futures. All right. We didn't have a live stream last Tuesday because I did not feel good. It's all there is to it. So yeah. All right. But this morning we're live and we're looking for trades. There just ain't much out there right now. Bitcoin's going to continue to go lower. One thing I will say that I do like about Bitcoin, in fact, is because it hasn't broken down. That's about the only thing that I can say about Bitcoin. I like you, Bitcoin, because you haven't broken down and made another 12-15% move to the downside, because that would put us way down here, and we don't want to go way down there, right? Because I lose a lot of money each time Bitcoin drops multiple percents. But I am looking for a short entry to get in with a decent sized position, right? But the problem is I can't short it here. I just can't. My strategy don't allow that. I could have potentially shorted yesterday had I been watching the monitor, right? Like I said, not feeling great. So I just basically was doing other stuff. 1 o'clock, I could have absolutely shorted that spike as there was resistance right there. That daily close, that should have been a short entry for anybody. Bitcoin is moving down, all right, and I've discussed this with all my Patreons, channel members. Yeah, Bitcoin's moving down. A lot of people are wanting to buy down here because I don't know why, but the structure is bearish, and whenever you have a bearish structure, once your structure flips from bullish to bearish, you go ahead and you start taking shorts. That's the whole. That's how this works. Your 50 is under your 100. Your 21 is under your 200. As soon as that 50 gets under the 200, it's going to be too late. It's going to be a death cross. Death crosses typically happen after a big move down. And remember, I did a moving average video last Saturday. If you go watch that video, it shows you and teaches you how to interpret what moving averages are going to do. So you can see the slope on this 50 currently. That is a pretty steep downside slope, isn't it? Even though the 200 has sloped to the downside as well, it will only take a couple big down candles, let's say 4 or 5, and this thing is going to cross. So we want to catch that before it happens. Why? Well, because we've already crossed it on the 21. We've already lost our bullish structure. Notice over here, we maintained it. The only thing that we lost briefly with the 21 was the 100 and the 50, right? That's okay. You can lose the 50 and still maintain bullish posture. In this area, I would have still been looking for longs. This structure is completely different. What you have is a breakdown, all right? You have a breakdown, and the moving averages have structured themselves for that, all right? Your 50 is under your 100. That is not bullish. That is bearish. Anytime your 50 is under your 100, you're looking for short entries at daily resistance. It's as simple as that. Short entries at daily res. So we will expect a death cross. If the days continue to be small like this, it could take several weeks before it happens. But if we get A couple days like this and one day like this, it'll happen, right? It'll happen. So we want to get positioned for that before it happens. Your weekly support has been busted. This is just a week. That's just the low right there. So 24,740 is what price looks like it is sniffing out. And here we are. Yesterday's low on the S&P 500 was the expected range for today. We have exceeded that expected move by $10. $22 was today's expected move on the ES, and we have exceeded that by $10. So we are $30. That means we have breached the daily expected move. I am curious to see if we have breached. No. Charts. Yes, we have breached the weekly expected move as well, because remember, when today opens, it's going to open down here. Right? Because the futures, this is yesterday's low. Right there is yesterday's low. So we're trading at 436, 446.75. Let's see what yesterday's low was here. 442.38. So off a little bit, but we're currently trading $10 under the low. So just all you got to do is go, say 442 and go down to 432. That's where you're going to open. As long as price stays down here, you're going to open under. This was the expected move for the week. We are breaching the downside the same way we breached the upside last week. And I was expecting it to break down. All right, I did post it on Twitter. We're probably going to see more sell side activity on the S&P 500, although others thought differently. So that's where we currently are. Let me put this back over there, as it's done its job. We just needed to see the expected move on the S&P 500. So not only did we breach today's expected move, we have breached the entire week's expected move. That's not great, son, for risk assets. In fact, let's pull out the chart. Excuse me. There we go. And just take a look at it. Boom, there it is. This trades kind of with the ES, but not really, because right now on my screen, the ES is 436. The ES minis is trading at 436.25. This is trading at 432.30. So its prices are different. Its candles are different. This line right here is old supply, right? Whenever you break down, that's old supply. Typically, when price trades back into supply, we look for short entries. We got it there. But this time we traded into supply, we broke above. So whenever you break above an old supply zone, that's a good area to look for potential longs, right? Because if it held as resistance here, breaking through it, it should hold as support there. It did not. So any long positions taken at that, people call them breakers and stuff like this because it's what ICT teaches, but it's just supply and demand, guys. He just renames everything. Everything he says is known. He did not invent anything. All right, moving on with that. But yeah, it's support, resistance, supply, and demand dynamics. It's simple. That's all it is, right? And so far, you breached your expected move to the downside based on bad news. But I don't really expect this to continue to move down like this. I mean, if it does, then we got something bigger going on. We have probably made a top. All right? We have probably made a top. Now, it's not easy for me to say that because I like it when things are bullish. It's simple. All you got to do is buy and just hold, and it goes up. I'm not saying that, but the market is really starting to think about this here, and it looks like it's starting to come together. But since we've breached the daily move and the weekly expected move, suffice it to say, typically they will bounce back, at least back to the range. So bouncing back to the range can be a profitable trade. You just got to nail it in the right direction. right? I mean, nail it at the right spot. I didn't have any kind of support down here. Don't have anything, right? The only thing that I could basically say is this day's close. And yes, it could act as support, but I would much rather have something more definitive. Please excuse me, my cell phone's going off. I have to get up and get it. All right, I am back. So on the weekly, like, I wouldn't be able to. Yeah, I mean, also, let me see here. Let's go back. This supply, right? You know it as supply. If you've been following me for any amount of time, you probably know it as a bearish breaker or whatever. But what it also happens to be is this week's open right there. The last bearish week we had until this week, because the last 2 weeks have been bullish. So yeah, you have broken back down into this weekly candle's range. So we could potentially look for a push all the way down to 4403 spot 30. It is the range. So like, I don't think, what I'm trying to say is, I don't think I could take a long on this unless we got all the way down there. And if we got all the way down there, then what does that look like to you on a larger time frame? This is the CPI high. It's also this week's high. Apparently, I didn't know that. But this is the CPI high. Well, I guess it would have to be that high. That Thursday made the high of week. We just traded up into that and we failed. You have not closed the daily above that. Now, if I just drop this over here like that, that is supply on a weekly time frame. Boom, short entry. Just hang on to it. All right, I see no reason for you to close that position. Maybe take profits. Maybe stop to break even. But yeah, as of now, there's no reason to think that that's going to do anything. But the reason I use the CPI instead of that weekly supply is because the CPI number is important. So it's telling us what the market is thinking. The market is thinking we got CPI, it went up higher, but we did have a beat on the month over month core from 4.8 down to 4.7. That's not really a great beat. We want it to drop to like 4.3, 4.0, 3.7, like those kinds of drops. That's why the Fed is not easing on their monetary policy. So this right here, to me, looks like one thing and one thing only as of right now, because you're still structured bullish on the weekly time frame. Your 21 is down here. All right. So we don't really start to get bearish on this until we start closing weeklies under it. Multiple weeks. It could take up to 3 weeks to set a trap. Right here, breakout. Well, let me get rid of the 50 to not confuse anybody. Right here, this is what I'm talking about. We had this big bullish move to the upside. Then we had 1, 2, 3 weekly closes above it. It wasn't until the 4th week that you knew that you were breaking down. This revealed the trap, because this was the breakout candle. So, and then you had a spike all the way up to this candle, and then it dropped. So that's what we look for, something like that. So if we do close under, and then drop back, get back above it, then we'll expect price to move higher. If we break down and continue to give a bearish continuation beyond that, then we're going to be looking for lower prices. But on the daily, since it's much quicker, we can already start looking for shorts. I wouldn't look for shorts now, right? Please do not short the low today. That would not be wise. You might make money, you might not. But I've already told you that you have exceeded the expected move for today, and you've exceeded the expected move for the entire week. So you're literally hoping to get downside continuation, of which you have already got. Now, I want to show you something here on these positions. This position right here, yeah. All right, it's not this one because this one says 0. This is how much I lost on the day with that trade, $11.25. All right, so this is that short call. I took a short at, or I sold a call at 46.40. This was getting its ass beat 3 days ago. 3 days ago, this was down. The P&L was like negative $140. But I know that it's a time trade. And all I need is a couple days of down. And not only will I recoup all those losses, it will go into profit. As of right now, that trade has got into profit. And we haven't had a severe downfall. We haven't had a crash. We've just had 3 down days. That's it. 3 down days in a row. And it took me from being completely in the red to being up. So, yeah, I'm going to hold that short call, right? I'm going to keep holding it because it's a way to make money on moves to the downside if you know they're going to happen. I did take another Walmart short call yesterday, and yesterday it didn't do anything. It did not move. See, this is all wrong because I have marked it. I bought or sold a 170 call on Walmart. Now, obviously, I don't know if this trade's going to make any money. Let's just all H it and then go into coordinates, do it ourselves because I ain't got time to fool with it. 170. Boom. There we go. So that's the call that I sold. Walmart made a fresh all-time high with this candle. I tried selling the call down here at resistance, but we breached above resistance and we closed back down. And then on this day right here is when I closed it because this day closed up, right? Near the end of the day. I waited until like 10 minutes before the market closed. And I was like, I'm going to go ahead and close that trade for a small loss. And then I just watched Walmart as it traded up to and breached its all-time high. And then what happened? You got a bearish reaction. But yesterday, it had a very bullish reaction. So I sold it when it was at this candle's open. So roughly around 161.80, I sold the 170 call. And what I want to see is I want to see this continue to roll over. If it continues to go up, if it makes a fresh all-time high, I'll probably close the trade out. All right. And it will be for a loss. That's the way options work. You need a lot of time, right? You need a lot of time in order to make money on short calls or short puts, because that's essentially what you're doing. You're selling time. Everybody wants to buy calls because Walmart looks like it's going to the moon. So I would like to be on the opposite side of that trade. I will be the market maker in this scenario. I am making the market by selling them that call. Now, even though, like that S&P call that I sold, even though it trades, say, it could trade all the way up to 168.50, and then I would be in the red, huge. But if it rolled over just a couple of days, 3 days, I'd be right back in the green. Right? It's because each day, even though price is moving higher, the premium is decaying with every single daily close. You are making a couple bucks, a couple bucks, a couple bucks, a couple bucks. And then when you get the move in your way, those couple bucks add up, plus price is moving in your direction now. So, booyah. All right? He's on fire. But we'll see how it reacts today with the S&P. S&Ps are still moving down. I mean, you're down 0.7%. That's usually a pretty damn good move. But, I mean, we've had a pretty volatile few weeks, haven't we? Right? Right in through here was kind of choppy to down, but then it went down. And then we had this explosive bullish move right here. Basically got everybody off sides. Right in here, this is that CPI number that I was watching. I needed to see a daily close above that. If we got a daily close above that, and then the next day we had bullish continuation, I would have known that the market thinks that the Fed is going to pause or even cut, right? But what the market has essentially done is ran the stops on anybody that, think about it. Anybody that nailed that perfect high and got short based on the fact that the CPI numbers were not bullish, they were stopped out. They were stopped out. This day purged, and then the next day purged even higher. So they were stopped out. But then 2 days of sideways, but still under, and then your 3 days breakdown. That tells you everything right there, in my opinion. Everything. It's saying the market's like, nah, I was just running up here to get this liquidity. Now I'm going to move lower because CPI was not bullish. Was not bullish. The dollar is rolling over currently. And we're still short Aussie dollar from up here. This white line right there is my short position, 67394 on Aussie dollar. All right. Still holding it because it just made fresh yearly lows. But the dollar has been on an absolute rip. Weekly, I think on the weekly, we're 7 straight weeks up. 1, 2, 3, 4, 5, 6, 7. Today, this is the 8th week in a row you've been up on the DXY. I can't remember a time when we had 8 weeks in a row. 1, 2, 3, 4, 5, 6. 2 weeks of pullback, and then you resume your bullish trend. You'll be hard pressed to find 8 weeks of straight up on the DXY. All right, so it's unprecedented. Unprecedented. This move right here was just a big place for people to buy. Big buyers. Big buyers. And we discussed the Wyckoff. Someone wanted me to discuss Wyckoff. Essentially, there are just two major patterns that Wyckoff discusses: distribution, accumulation. All right. So what's another word for distribution? How about a 3-drive topping formation? That is a form of distribution, but it was called a 3-drive topping formation or something to do with Indians, but I don't want to do that, or I don't want to say that just because it's a little bit racist, right? But that was way back in the day when it was okay to say stuff like that. Nowadays, it's not. So, but it's just a 3-drive topping formation. Wyckoff discovered the 3-drive topping formation and renamed it Wyckoff distribution. All right. All right. So, and the second pattern known to Wyckoff is what? Accumulation. What is that pattern look like? Well, it's this pattern right here. Okay. It is a descending wedge formation. Let me get rid of the moving average so I can make myself absolutely clear here. This is a descending wedge formation. All right. Usually they are looked at as bullish patterns. All right. Whenever you see a descending wedge after a down move, those are typically looked at for bullish breakout potential. This is called a descending wedge. It is also called Wyckoff accumulation. Here's your springboard. It's just the run on the stops and then you go. So Wyckoff he wrote books and took already well-known and well-traded patterns and then just put his name to them. All right. I don't really like the guy. I don't like anybody who takes already well-known things in the world of technical analysis and then rebrands it. So like, for instance, I could write a book on when the 50 EMA crosses the 200 EMA, and I can call that the trade talk slap your mama in the face pattern, right? And write a book about it. And if that book became super popular, it would no longer be called a death cross. It would be called a trade talk slap your mama in the mouth pattern. And it's bearish. Okay? That's essentially all ICT does. That's essentially all Wyckoff did. Now, you can look at this pattern right here and see the descending wedge formation. It's everywhere. Everybody was talking about it. Anybody worth their salt in this game was talking about the DXY descending wedge. I was. Everybody was, right? Because it's there. And we had to be careful because those are typically looked at as bullish breakout potentials, or looked for bullish breakout potential. Let's go look at Wyckoff. All right, we're going to look up Wyckoff, and we're going to see, sorry, I'm Southern. I'm trying to say Wyckoff, but my Y sounds more like an ah, because I'm Southern. Wyckoff, Richard Wyckoff. Here's your pattern right there. There's your accumulation schematic. Those are basically about the only two patterns you're going to find, bro. This is distribution right here. You make a 3 drive topping formation. Here you go. I'll show you. 1 drive, 2 drive, 3 drive. Insignificant high. From this high, then you pull back, which you did right there. Let's make this bigger. So here's your high. Then you break down, right? And then you go back up, make another high. So essentially what is happening here? What is causing a 3 drive topping formation? And then you have another insignificant high. And on the third one usually is when you see your big dump. Essentially, big firms, billions of dollars, are selling into this up move, right? And then price drops because billions of dollars sold into it. Then they stop selling, right? They stop selling. They make one sell, boom. And then retail drives price right back up. In this scenario, they didn't. But finally, retail drives price all the way back up. And then your big distribution or your big firms come back in and they hit it again. Boom. Right? And then what happens? When you break out of an all-time high, you're supposed to see what? Bullish continuation. If you don't see bullish continuation after a breakout and the high that you made is kind of insignificant compared to the last high and you instantly dump, you got to be careful because when that third one comes in, yeah, that's the end of it. Bitcoin made that same formation back in the day. Everybody knows it. In fact, one guy got like 500 million subscribers just for calling it out, right? Just for calling it out. But it's the same thing. It's a 3 drive topping formation. Right there. There is your 3 drive topping formation. Each high, instead of getting bullish continuation, you got what? You got to pull back. So here it is. Here's your fresh all-time high. So yeah, baby, moon. No, what did it do? It immediately pulled back. So they stopped selling there. Retail picks it back up. And then they hit it there. Boom. What happened? Bitcoin flush dumped. Took out that low and that low. In fact, it found support right there. Well, you can't see it because I can't draw straight lines or use this drawing tool. So we'll just do this. Boom. Oh, it wasn't that one. It was this support. Sorry. Right there. So that was the support that Bitcoin found and then went to the upside, but it did not make a fresh high. In fact, all it literally did was trade into supply. And on that day right there, you could have essentially taken a short and, set your stops because you could see bullish continuation the next day. We never know what's going to happen. Even if this pattern plays out over and over and over again, it doesn't work 100% of the time. So my guy wanted me to explain Wyckoff, and that's all I know about it, right? I've never read any of his books because I just see people like that as frauds. I mean, they're literally slapping their name on already well-known patterns. The springboard, it is a liquidity run. I mean, liquidity runs have happened since before time. I mean, since trading was invented, they've been happening, right? So he calls that a springboard or a spring, right? Because that's when you want to buy. And guess what? We did buy that. We bought it right here. Now, this isn't, or is it a Wyckoff formation? Well, it would be, right? Because you have your low, then you have your spring or your liquidation. That's when we bought Bitcoin initially. And I would still be able to show you that position had I not fat fingered and used the right account. I accidentally used the wrong account and bought again in here, and it brought my cost basis up. So I no longer had proof to show you. But at one point, there is videos out there, live streams, where my entry was literally that low, because all I was doing is waiting for that low to get smoked. And once it got smoked, I bought it. That's simple as that. I bought it looking at this to be, the bottom, if you will. But it's okay because I bought at the 2021 yearly open, which is right there, and not long after Bitcoin took off. So Wyckoff is just a bunch of already well-known patterns and formations. So you don't have to call it. If you want to say it's Wyckoff, go ahead. If you're a fan of the guy, go ahead. I don't have any problem with you saying it or using it. All right. It's just, they're already well-known formations. I don't think you'll find much of day trading going on in Wyckoff. And let me explain something to you. Day trading inside days or intraday, you're not going to find those formations. You might think they are, but yeah, they're not really, right? In order for a real accumulation to happen or a real distribution to happen, it needs to happen. And usually once it starts, you'll know it, right? Because you start seeing big bullish candles and they don't freaking stop. Right here, we got one big, great, giant candle, then one bearish candle, then another not so big candle. And that was the end of it. Then the run petered out, right? It petered out. What should have happened here? Seeing how you stopped that high, right? You stopped out that high. You stopped out that high. What should have happened when we did this? Why are you super ultra huge now? I did not touch it. You should have broke out. You should have had a day or two of pullback. Then you should have went roughly the same size, right? Roughly the same size. A measured move taken from this would have put Bitcoin up to yearly supply again or above it. And it didn't happen. Instead, it broke down, traded sideways, broke down, traded sideways, had a nice wick up and dumped. So there is no accumulation happening on Bitcoin right now. None. Accumulation will happen once you take out this low, maybe. Right? That's high risk trading. Whenever a low is smoked, it is a pretty significant low. Whenever a pretty significant low gets smoked, a lot of people want to buy that. And I would say it's okay to buy it, but do not freaking chase it. If you buy it and then you get stopped out, do not attempt to buy it again lower. Oh, it's going to turn around. It's going to turn around is what you're going to tell yourself because you're a fan of ICT, right? Or a fan of mine. No. If you're a fan of mine, you know that I do not do this unless it's a news event. I do not look for liquidation runs unless it's a news event. So in a news event, when you liquidate a previous daily's high or a previous daily lows, then we look to go the opposite direction. And still, it doesn't always work. So if you want to buy this low, 25.20 or 250, be my guest. But please do not chase it. Risk 1 to 2%. Put your stop loss wide. And if you get stopped out, you're probably wrong. You're probably going to see downside continuation. All right? For instance, if you would have bought the liquidation of this low right here, let's get rid of everything. This low, we'll even get rid of you. This low, that was the lowest low in this price formation here, except, since lower lows were being made is what I'm talking about. That's your lowest low, and then you got bullish continuation. This was a higher high compared to that high. This low was a higher low compared to that low. This move right here juked everybody, including myself. So if you would have bought that, say you bought it, right? You waited for the liquidation and then you gave it a little bit more time and then you just bought it, put your stop right there. When price traded up to there, you were like, oh yeah, boy, I nailed the low. And then this happened and you were like, well, shoot, it's going to go up. Oh man, it's going to hold support. Upon the break of that, candle, you should have exited that position and taken your profits. That would have been your support intraday. So upon this candle right here, breaking down and closing under, you should have taken any profits you had from this region, because you only had a few more hours and then you were stopped out. And then your bias probably said, buy it again right here. Well, let's just check the midpoint of that, because that's probably where people were buying. And you can't chase those moves. This right here is literally showing you bearish continuation. Yes, you got a nice little bounce and it lasted for what? 1, 2, 3, 4, 5, 6, 7, 8 hours. But on the 9th hour, once you broke below that support, probably should have gotten out of there. If you didn't get out of there, you definitely should have got out of there upon this one, because this one took out the low of that, or the open of that bullish candle. Once you took out this bullish candle's low, that's not good. That's not good. At any point in that, right there, I wouldn't have been looking for shorts down here. I'll be honest with you, because with that low being there, yeah, it's difficult. Please do not chase those moves. If you're going to buy them, but only buy them once. And I advise you take profits if you get the bounce in your direction, because there is nobody buying this. In fact, if you go check out the last Glassnode video they put out, they are showing capital outflows, not inflows. Now, some people are going to tell you that that's bullish. That means people are buying Bitcoin on the exchange and then they're putting it off exchange into cold storage. That's not the case. It's not the case, because all wallet addresses are tracked. All of them. Your cold storage wallet is one of them. And right now they're seeing more outflows than inflows. Outflows is not good. It's not bullish. Now, I'm not saying Bitcoin is going to roll over. On a technical basis, I am specifically a price action analyst. That is it. I tell you my biases based on price action and what moving averages are doing in the RSI. That's literally all the indicators I use or care about. If I'm trading intraday, occasionally I will use your volume profile, but literally volume profiles are tricky business too, right? They're tricky business too, because if you have more buying than selling happening in that day, it could tell you you don't necessarily want to be a seller, right? But it doesn't mean that price is going to go lower. And where is it? I must have accidentally deleted it. There we go. All right, so for instance, let's go to the S&P 500, and then I'll answer questions, and we'll wrap this baby up, because we got 2 minutes to the market. All right, so here's the S&P 500. Let's put the values on there, because it literally shows you bid asks, right? Those are your bids asks, buys or sells, right? They go down as volume. On this day right here, when the day totaled out, you had more selling than buying. You had 11.8K bid, 13.4K ask. That means there was a lot more selling going on in that day. Currently, we have 4.91 bid, 6.6K ask. However, you can see how that just changed, right? From 4 to 5. This thing changes all day long because trades are being placed all day long. So as of right now, you might be getting beaten by the ask, but by the time the day closes, this thing could be trading up here. And this number on the bid side could be higher. But I do occasionally take a peek at this for intraday purposes only. For instance, let's get rid of the values as they've done their job. I just wanted to explain to you bid ask. Down here, the blue represents bids. The yellow represents sells. So at least you could say there's more buying going on currently than selling down here. And there's a whole lot of nothing in there, just a bunch of sells. So price is probably going to bounce. And we've also reached its expected move for the week and for the day. So be very careful. I'm not saying you should buy it. I'm not saying that at all, because we don't know what's about to happen. This thing could be getting ready to throw us a big, nasty down day candle. Like, we could be seeing something like this happen today. We don't know what's going to happen ever. Ever, ever. All right, the market's open here. For anybody that is tracking the account, right, the account, because it is live funds, let me make sure you can see that over here. Yeah, you can see that. All right, 527 is current P&L. So that's year to date. That's how much I've got year to date. Now, I dropped this account twice. The second time I got killed, it took it into negative. Took it into negative, but it was negative briefly. But as you can see, it's right back up there. So it will grow over time. I'm not going to do no more really super risky trades anymore because I am running signals on this account. However, I am not signaling when I am trading like something like Tesla, like if I buy a Tesla put or a Tesla call, because it's so risky to do that. And if you have less than 25 grand, you only get 3 day trades. A day trade is if you buy and sell in the same day. That is a day trade. You can only do that 3 times per rolling 5-day period. So if you do all 3 day trades on Friday, thinking Monday you're going to have 3 fresh day trades, nuh-uh. You're not going to get any fresh day trades till Friday. You got to keep that in mind, because if you buy a Tesla put or a Tesla call, it moves so damn fast. If you've already exceeded 3 day trades, they won't let you sell it, right? You'll be like, I can't get out. And you might wake up tomorrow with a gap up and a move up. And that would really destroy your account, because Tesla moves, man. It moves. It's got the moves like Jagger, right? Tesla does. That's why it's so fun to trade. It moves quick. You can take one decent trade on Tesla and be in fantastic shape. Make a couple $100, $300-$400 per contract easy in a day on Tesla. Look at that. Look at that. Huge gap down. Because it closed up there at 251-ish. Yeah, 251. Gap down to 244. Imagine if you would have bought that and woke up to that. Be still my heart. You would be begging Tesla to drop, praying to the Lord Jesus to make the market go down. Don't ever put yourself in a position where you need to pray, my people. All right. 1060p, 60 up, good cheers, awesome. Futures are great. Yes, they are. Wes finally joined live after a long time since off work today. So happy. 38 people watching, 18 likes. Let's go, fam. Smash the like button. Thank you, Ajith. I appreciate it. Annie, I'm not sure how you like to be called, but either way. Is that 525 profit on the year? Yes. OHM. I opened the account with $5,000. That is a 10% gain on the equity. All right. It doesn't look like much because it ain't. It's a $5,000 account. I'm just trying to show people that you can make consistent returns via using options and different option strategies. $500 is the P&L year to date. That's how much profit I've made on the account. Once again, that is a 10% return. So if I stop after 14%, I have beaten the S&P 500, which there isn't many traders that can do that. All right. So I decided I'd use live funds and show you that I can. That way there's nothing to be said. And if you guys want me to have it third-party verified, I will. I will. I just I gotta make sure that there's no like sensitive data on that form, but I will absolutely give it to you. It's got a lot of trades on it because I have done some in and out, in and out, in and out on the futures. But I'm going to try to stop doing that because I'm going to build the account slowly over time. And my goal is to double it. And once I've done that, then we'll call it a day. But I'll still continue to give signals and stuff, but I'll go back to trading the main account. I still kind of do, but it is what it is. You don't have to open the account with 5 grand. 2 grand is the minimum to be able to sell options. Now, 2 grand isn't going to give you much buying power. But if you sell the macro futures options, they only require like $800 of buying power. So you could potentially do one of those, you know, whether it's a put or a call, just to make sure it's a high probable 9 delta, 8 delta call. If you're going with puts, I would go lower because when markets crash, they crash faster. All right, they crash much faster. So your put position could get hurt really bad. So here we are. Like I said, I'm expecting it to bounce. Not a lot of selling going to happen down here because it's the expected move. It's the expected move. Am I going to buy it? No, I'm not. I'm going to wait to see if it goes up, finds resistance, and starts to roll back over. Essentially, what I'm doing here is I got an in and out spread on Microsoft. Oh, no, it's not an in and out spread. It's just a vertical spread. So let's go to the table and I will show you. And it's only 15 days out. So I bought one strike out of the money and I sold one strike out of the money. I'm pretty sure this is it was an in-out spread. I'm pretty sure I bought one strike in the money and sold one strike out of the money. That's a $2.50 wide spread. So the most I can make on that trade is $2.50 minus the $1.13 I paid for it. So I think the total amount of money that you can make on it, well, do the math. 250 minus 113. Boom. That's the max you can make on it. So what did I say? 250 minus 113 equals 137. So that's max profit, but my downside is limited as well. Right? Downside is limited as well. I can't exactly remember what the downside was on it, but I'm sure it was a 2-to-1 risk to reward. Because I did get it cheap-ish for $1.13. That's also a way you can trade those really expensive options that require a ton of buying power, right? Like I can't go outright and sell. Well, I can't now, especially because my buying power is at $13.96. So that's how much option buying power I have left, $1,300, which that's as low as I'm going to take it. Okay, because if this moves up, if you have any short puts or calls, as price moves against you, this goes up, so or down, right? You'll lose buying power. And if it goes up too far, if the price goes against you too far, you'll be requested to put an additional $1,800 into the account or close a position. It's called a margin call. This is the margin that I have left. But say I wanted to go out here and sell a 43-day call on Tesla, way out of the money, right? So this is in the money down here. There it is. You can barely see it. It says ITM. So all this shaded area is in the money. This is all out of the money. So if I wanted to go sell a way out of the money call, it would cost me $7,600 in buying power. So I can't, even if I don't have any open positions, I cannot take this trade. I would need to have $7,000. So I would have to, the account would have to have, it would have to have $2,000 of profit in it, more. And then you would be exhausting all your buying power. You need about 8 grand, 9 grand to short a call on Tesla or a put. But if you try to do it on Thinkorswim, it's going to be much more, much more. That's why I'm trying to tell people to come over to tastytrade, because all you got to do is deposit 2 grand, and then you can go right into the MESs, which is just a micro. It is a micro, and they have options. This is a futures account. So there's that short call right up there. 1975. All right. What did I sell it for? 23.75. So I sold it for 23.75, and if I wanted to get out of it right now, I'd make 18 bucks. Right? But I don't want to get out of it right now. I'll give it a couple more days. If we get back up and make fresh highs on the S&P, that means you'd be making fresh highs on Tesla as well. But if we get back up into this area, I'll close it for a small loss. But if it takes 30 days to get up there, I'll be in profit no matter what, right? It's about time. So usually selling calls and puts is best to do in a sideways market, not a trending market. Like down here, when it was trading sideways, you could have sold like the 42.40s or the 37.46s, right? Because it was sideways. That's typically when you want to sell calls. Sometimes I'll do it through earnings, but I almost got burnt really bad doing that. So it just depends on the asset, all right? There's a lot of factors that I weigh into it before doing it. Because like I said, if I sell a call on it, I want to make sure it's well further than it's ever moved before. If it's moved 20% before on earnings, then I want to make sure that that call is at least out there to 35%. And then it's got to have enough premium on it to even make it worth it. So, yeah. But there we go. You could even potentially sell a put on this. But like I said, selling puts is dangerous when you have a potential topping formation going on. But we are at the bottom of the range. So we could potentially go out there and buy a SPY put. I mean, a SPY call. Let's just say for a day out, because it'll expire tomorrow. And we could go $2 in the money, say buy the 443 calls. And we do have a day trade left, so we could potentially close it today. Or we could just do 0 DTE option, which is 0 day to expiration. As long as you're long a 0 day to expiration call, you're okay, as long as it expires in the money. But there is time value left on it, and you will lose that. So you will lose 26 cents on this if it stays trading where it is. And if it stays sideways all day, you will still lose 20 cents. Right? When you buy a call, you literally need price to go up and continuing to go up on these 0 day to expiration. Let's see what they're doing on the SPY right now. They're probably like rushing the market to buy calls because smart traders know that we have hit the expected move. Retail will be buying puts. Those are the sellers right there. Doesn't mean they're opening new positions. I don't know. It's just sellers. Your buyers are at the ask. So as of right now, there are more people buying puts than they are calls on the SPY. So that can be dangerous. That's retail saying, oh, it's going lower. We're breaking down. You got roughly quite a few people selling calls as well, but more people selling puts. So I would say people are selling puts. This is just today's option statistics, right? But you can see the puts are beating the calls, whether they're being sold or bought. So yeah. And these things over here, this thing, big delta trades, blah, 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 buy 2,500 Apple Jan 19, 24, 195 calls. This could be a hedge. So don't go out there and say, oh, somebody's buying $2,500 calls. No, 2,500 calls on Apple at 140. and that's a year out. That's a year out. So Jan 19, 2024, 134 days out. What call was it? The 170s? 195. So they're buying out of the money calls right here. 195s. And they bought 2,500 of them. So that's going to help the open interest here, even on Tasty, because options are cleared by the same people. No matter where you buy the option from, it still goes through the same clearinghouse. So whatever Apple has on it, it's going to be roughly the same on this. The options, Chicago Options Clearinghouse or something like that. Some random number or random letters. Why can't I delete that? Oh, that's why, because I'm not there. We don't need the news anymore because basically we got all the news we need this morning, or all the news that it was going to happen. Doop, boop, boop, boop. Yeah. I mean, we got some Fed members speaking today, but you got crude oil inventories today. That's going to be big for the oil market. Here's a SPY gap down, going up, trying to close that gap. So yeah, be careful out there today, everybody. Let's go see what Mara's doing, because I sold a $15 call on Mara. It's going down. Lovely. Let's go check out where we're at on that Mara trade. Oh, we're only $12 in the profit. But this is over time. You can see the profit potential bar is just there. So once it gets about 50% in the profit, I'll go ahead and close it out. If it does. If it does. But yeah, Walmart's down $9, so Walmart must be pushing up again. And I closed that trade, WBA, Walgreens, because I told in the signals room that if it doesn't bounce up today, that was yesterday, and I mean a big bounce, then close it out. It didn't give us a big bounce. In fact, yesterday, this is what it did. It made a lower low and then bounced back up to the open. It was unchanged on the day. So I wanted to see a big bounce. Big bounce. We didn't get it, so I closed that trade out for a $53 loss. $53 loss. And so Walmart and Microsoft are the only current trades that are setting in a loss. Finally, read that. Could I give a look at Apple? Yeah, we can go look at Apple. Someone in the Discord mentioned that they were getting killed because of China. I don't know. I don't know. I didn't hear any news or read any news about it, but yeah, that's getting killed, man. That's getting killed. So what do we got going on here? This is old. We can get rid of it. August 1. June's open. It could act as support or resistance. We'll just call this AUG low. Because if it's going to go lower, that's the price it's going to be sniffing out. That's if, guys. If. All right? This is still structured bearish. I mean bullish. Sorry. Can't get my words right. This is still structured bullish. Ooh, it might not be structured bullish on the weekly anymore. Ooh, it's close. See, this is a bear trap. right here because you closed that weekly under and then bounced right out of it. Be careful, right? Be careful shorting things that just break down because they don't have to stay broke down. But now that we've taken out this candle, since we've taken out the low of it, that could have been a bull trap. Could have been. So we'll see. We got today and tomorrow to trade. Does Apple close down here? Could one look for potential bearish entries there? 180.09. I don't know if I would because that probably still keeps you in or around the expected move lows. So let's pull up Apple. Oh, you have completely breached the expected move. This was the expected move for Apple this week. The black line is the midpoint, essentially. So the market expected it to move from 189 up to 193 or from 189 down to 185. So it had essentially a $4 move on the week. Obviously, you can see we have more than exceeded that. In fact, we took out last week's expected range low. So yeah, Apple's not looking great at the moment, but a lot of investors out there, it's split on the street 50-50 if we're going to have a recession or if we're not going to have a recession. Since price done what it did, also look at this. This is very important. Be careful looking for sells right in here. Be careful, because this is a buy opportunity. But we'll see what happens with it. On the daily, what in the hell is that? I don't like that. On the daily, it doesn't look great. On the daily, you've lost your bullish momentum. But that's going to determine. Right here is that weekly supply zone. So if we got up to 180-ish, maybe buy a put. I don't know. Like Apple is like Tesla. It moves. I mean, from yesterday's close. Yesterday closed at 182.91. Today opened at 175. So 182 all the way down to 175. Damn it. That's a $7 move. And this week on Apple was only expected to move $4 up or down. You moved a lot more than that because there's when we opened. What's the open on that? 188. You're literally 188. This is an $11 move. Wow. They got that one wrong, didn't they? So what happens when they get it wrong? Well, option sellers get creamed. If they get it wrong, option sellers get creamed. Anybody that was selling calls under 185, they got absolutely smoked. So I don't really use the expected move as far as for selling options or nothing like that. I use my strategy basically. When I think something's going to move in a specific direction, I'll take directionally biased trades via spreads or just by outright buying or selling calls or puts. But we shall see. What we got there? SP 500. Already that little up move's getting hit. I was trying to sell this the other day, but I got stopped out and then it rolled over. Beautiful. Beautiful. What do we want up here? Bitcoin. Yeah. The reason I sold the Mara call, let's pull Mara up real quick, is because Bitcoin has already exhausted this entire bullish candle. All right. And Mara is a miner or mining company. That's why the price moves similar to Bitcoin. So the way I was looking at it is, since Bitcoin has already exhausted that big green candle, I could sell the $15 calls, which is right there. That's also at a daily resistance, mind you, right? So I sold the $15 calls thinking that, you know, I don't remember how many days out. I did it, maybe 30-ish. Usually I go about 38 to 40 days. Yeah, 43 days out. The reason for that is because once you get below 30 days, the option time value goes, ooh, right? Like this is 90 days, 60 days, 30 days. The time decay really starts to grow exponentially once you hit the 30-day mark. So, but I've had trades go into 50%, 40, 50% profit in one day before, right? And I've had trades do 100% profit in one day. The earnings trades, where like on AMD, I sold a call way out of the money, and then earnings came out and they beat earnings, but they still had a big dump day. That day, when I woke up, I was at 100% because all the intrinsic value left, or there isn't an extrinsic value. All of the extrinsic value is gone out of that because they had the IV jacked up to like 148. So, and then the next day it opened up at like 40. So all that implied volatility, that's why buying outright puts and calls before earnings is so dumb. Because you're going, even if you're in the right direction, you're still going to lose a lot of money based on implied volatility, because the implied volatility drops dramatically. So if you want to do an earnings play, the best way to do an earnings option, long option play, is to go way out where the IV is not so much. Now, IV on this is obviously high because it's a very, very volatile asset based on Bitcoin. But something like Apple, for instance, the implied volatility is low out here. So they got earnings coming in this week right here, October 26th. So this implied volatility, it's not showing it to us, but you can see how it goes from 23 to up to 26, right? So in order to do this, you would want to buy something in this region here, 25.4. That way you only lose a couple points on implied volatility if you're wrong or if you're right. And if you're right, you'll make money if obviously a price goes in your direction. But I would also buy at the money. At the money, way out where the IV's low. I think we could write a song or name a song, Way Out Where the IV's Low. It could be a country song. Who wants to write me a country song, Way Out Where the IV's Low? Could you give a, yep, just did that. Is that 527 profit on year? Yep, cool. Thanks for clarifying. Makes sense. Do you ever play with spread betting? Spread betting. No, if I don't really know what you're talking about, spread betting. I think that's only allowed in the UK. In America, spread betting is not allowed. Neither is trading CFDs. Like you guys can trade oil on Oanda. I cannot. Not in the US because that US oil is a CFD, and in America we cannot trade CFDs. So yeah, nope. I haven't done spread betting, but I do trade spreads. I mean, I guess that's kind of spread betting because I'm betting that I'll make the spread minus the premium paid. I'm not sure what you're talking about though. I bought out of the money call on Apple. You bought an out of the money call on Apple. So that out of the money call is getting killed today? Is that what you're telling me? Whew. Yeah. I mean, hopefully you bought it a long ways out, like 90 days. The dollar is moving up, as we can see there with the USD CHF. Where are you at? Where are you at? Yeah, it's still like this to me looks like it's struggling to break out above that monthly resistance. So we'll see. The dollar has made a very large move. So if we get 2 or 3 weeks of pullback on the dollar, that's going to put these risk assets back on bullish. So maybe sell a put. I don't know. On the macro. If you go to sell a put on the macro. So that way you don't lose very much. Let's go sell. Like anything in here is going to be cheap. Like it won't even be worth it. Say the 440s. Where are we trading at now? We're trading at 440. Why does this thing say we're trading at 490 when we're not? 4,500? We are not. We are trading at 442. This in the money should be down here. Why is it up there? Somebody give me an answer for that. Like maybe I'm overlooking something. That's U3. What is this? This is U3 too. Yes, U3. So the difference between U3 and V3 is AM settlement. That's the difference. Or ZMSZ3. It's AM or PM settlements. But we're trading at 440, 4440 right now. The in the money should be down here. Or the at the monies. That doesn't make any sense. Oh, I bet I know why. It's because these prices are timed by 5. So like if I wanted to sell the 440 puts, which I wouldn't, let's go down to 370. Yeah, there's just not enough money in that. Let's go 26. So I can max profit 130 bucks because 26 times 5, right? So maybe that's why it's all the way up there. 26 times 5, 130. See that? Max profit 130. So maybe that's why it's all the way up there. That still doesn't make any damn sense. But I mean, I don't know if I would sell a put, to be honest with you, because it doesn't look like the market is trying to pull back. We're not going to know when it does pull back. It's just going to one day, it's going to settle low and then pull back a little bit. Or the dollar is going to set a high over here and pull back. When this starts to pull back, these things will start to go up. So I guess what I'm saying is I would love to see a couple big down days. We haven't gotten big down days. Today you're down less than 1%. You know what I mean? Like I would want to see one of these, and then another one of them, or this one, then that one. Boom, 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 right? That would pretty much seal its fate. But right now, people will still be looking to buy this. As it has made a lower high, it has not made a lower low yet. It's got to make that lower low. So it's got to get down to 43.36. but it's trading at the lows still. Hey Heath, where would you say is the next resistance level for DXY on the weekly? Right there. But we're at monthly res right now. That's your highest bullish close since the drop. You're trading above it. 105.26 is going to be weekly res. Weekly res was here. It did hold for 1 week. We got that drop and then that astonishing move back to the upside. So one could argue that the dollar has already pulled back because it took out that week's low even. That is a pullback, even though it closed up bullish. The jobs data came out on Friday. Straight up. So this could be considered a pullback. So that doesn't mean the dollar has to pull back. It could go up another 3 or 4 weeks. I think this week was intended to close bearish. It just didn't. It's starting to get some momentum now. $24 on that. $16 on Mara. I'm still losing on the Microsoft and Walmart trades. Oh, that's right. I wanted to look at Walmart. I haven't seen what Walmart is doing yet. It was gapping down slightly. Just barely. Oh, nice. Got a big, nice move to the upside. Whew. Almost to resistance. If we lose that on a daily closing basis, I definitely close that position. For sure. I took the trade yesterday, though, when it was right here. So that's why I'm only losing $9. Because it's only up to there. Once it gets under here, if it gets under here, 161.87, it'll start making profit. But Walmart, for some reason, just all of a sudden got a nice big boost, and Target's not looking good. Target's not looking good. Let's also look at the Market Watch. So here is Market Watch. This is just the S&P 100. It's the biggest names in the S&P 100. You can see it's split, right? There's more declining, but for today to be a down day, this would need to be like 80 to 20 declining. So you got some stocks that are up. TMUS, Lilly, KHC, Johnson & Johnson, Intel, EXC. Let's go look at tech, and then we'll wrap it up. Let's go look at the tech sector. Gap down and still red on the day. If the tech sector begins to be bearish, then the S&P 500 is going to come off. It's going to come off hard because literally the only thing that's been holding it up has been the tech sector and the communications sector. This sector is up big also. See, it's up big. So this sector, XLK, is up big. That yellow line, 2023 yearly opening range. Financials might be able to do a put spread here. Just because it's back under the yearly opening range, under the 21, under the 50. But it matters how today closes. So I'll wait near the end of the day on XLF. If we close, lower than yesterday's close, I'll put on a bearish put spread or just buy an outright put. I'll probably just buy an outright put because it'd be cheaper than putting on a put spread. I mean, I don't know if it would be cheaper. It would be cheaper to put on a put spread as far as how much money you pay for it. XLF. We'll go to trade. So say 36 days. You could buy and in the money. And then let's see, 34.50s. We could go down to 33.50s. This thing doesn't move very quick. So let's buy that and sell that. So max profit would be $61, max loss 39. 39 bucks is your max loss. Right? And the amount of buying power that it takes is $39. So it would be a lot less. It would be cheaper on the buying power if we did put on a put spread. The buying power to do this would be $81. So let's go to 33.50 and let's sell that. Let's get it at 39 cents. Max profit, 61 bucks. So we could double our money essentially. Not quite, but close. What happens if we go down to 33? There we go. 100 versus 50. We'll put this one on. It's working. So we'll see if that one gets filled. Because I'm not risking but 50 bucks. And it would have to get up pretty high for that to happen. And then since I'm going so far out, like, what was that? 36 days out. So if you guys have an options account right now and you want to put this on looking for it to go bearish, I'm out 36 days, October 13th. But I haven't got filled yet. It will probably get filled. I think it didn't get filled because price moved lower. Yeah. So we'll just wait for the intraday bounce. The intraday bounce happens, it'll fill us, and we'll be in. And basically all we're doing is we're saying, yeah, we think this thing's going to trade down lower. Because the regional banks are just not lending, right? So we'll do that. So anything to $33 is going to be profit. $33 is just right here. So right there, that's where we want it to go. If we get filled. I'm not going to chase it. Do not chase price. I want to fill at 50 cents. That way I can only be risking 50 cents. Max profit, 100 bucks, which since the account's only got $5 grand in it, that would be a 2% gain, essentially. With little risk, right? Because I'm waiting on is 36 days out. I'm expecting this to happen in 36 days. I know a lot of people don't like to wait 36 days. And in most cases, if you're in the right direction, you don't have to wait 36 days. You just need price to get to 33 bucks, which is under that swing low right there. So we'll see if we get filled. If we don't get filled, I'll take it off. If it just drops today, and we'll reevaluate the situation tomorrow. 106.5-ish on the DXY. No, it's not an ish. We got the actual weekly res. It's exactly 105.26. 105.26. That's weekly res. Monthly res is currently here though. 104.95. So if it's going to pull back based on 2 solid months of upness, then maybe it pulls back here. It pulled back here once before, so maybe it does. Or who knows, maybe it breaks out and continues. But, 8 weeks of straight up that 1 week did look kind of bad. This was that week right here. And then we had Friday, Thursday and Friday. We had big news on Thursday. We had big news on Friday. So essentially, that what would have been a weekly pullback, the news just made it go up. And it's been going up. And then lastly, oil. Oil's having a bit of a pullback today. And we did get those numbers out for oil. No, they come out at 11. Crude oil inventory. So oil might get a little bit volatile. So be careful trading oil. No towel in the sauna. Damn right. That's the only way to do it. All right, you guys have a fantastic rest of your day. Keep watching that XLF. It's out of the money, or was one strike in the money. So it's an in-out spread, an in-out bearish put spread. So we'll see if that gets filled today. And it's for a month out, so we're good on time. And we'll see what happens. But like I said, if the dollar does pull back, a lot of these risk assets are gonna catch a bounce. And right now today, advancing is 40 or 61, and there's 40 declining stocks. So it's kind of half and half, but you can see that your S&P 500 still has not hit a 1%, where you are down on the RTY 1%. So the RTY is about to make a lower high and a lower low. This is mid caps. This is what I mean. If they dump tech stocks, then the S&P 500 is going to come off. Because I think like most of your other sectors are under yearly opening range. Not the communications sector. XLF, under yearly opening range. Energy is now, thanks to oil, above the yearly opening range right there. Retail, it's getting close to yearly opening range. XLY, consumer discretionary, it's up pretty damn big as well. XLB, up but not big. XLI, industrial, is up but coming off. About to make a fresh lower low. And we got a lower high. So maybe we should look at the XLI instead of the XLF. Same thing, 36 days out. We could do a dollar wide spread or a $2 wide spread. So you would want to buy that, sell this, be minus $78 versus 122. Wouldn't be a quite 2-to-1 risk to reward, but you would need it to get down to 104. 104 is right there. Huh. Yeah, I would rather do this the same way as XLF. I don't want to sell up. I don't want to do a bearish put spread while prices is already dropped significantly. If we get like a retest of 107, then we'll think about it. We'll just keep XLF on for now because it's cheap. All right, so that's that. Oh wait, let's go home builders. Home builders are up. We did consumer staples. No, we did consumer discretionary. Consumer staples, under. Real estate, under. And finally, utilities, under. So a couple sectors are up real big. Those are the sectors that they'll rotate money into, right? They'll take money from XLK and roll it into something like this, something that's been beat up on the year, if it even happens. And let's look at NVIDIA, because we looked at Tesla. See how bad it's getting killed. It's not. It just now came off. So yeah, NVIDIA pulling back. We'll see what it does. It did a deeper correction here, but this was a fresh earnings. I remember these earnings and then these earnings. It's like there's no way that was a whole quarter. But it is. Either they go late or they go early. Not sure how to not sure how to say that. All right, you guys have a fantastic rest of your day. If you have any questions, always just drop them down in the comment section. I answer every one of them. And with that, we see you guys next week. Make sure you trade safe, trade smart, and as always, happy trading, everybody.